Well, from Tesla to the NASDAQ to what's going on out there with the government, we have a ton to go over, so let's jump right into it. One of the things that we talked about earlier on Saturday was this S5FI and the NDFI, and we can just see that when the 50% and the 50% above they're corresponding, this is the S&P and this is the NASDAQ. What we can always see with something like this is when those percentages are out of balance, they mark highs. When they start coming back down, meaning NASDAQ leading as more names above their 50-day on a percentage basis than the S&P 500, that tends to mark bottoms. And we're seeing that. So this probably did mark that September bottom pretty clearly. And we're starting to roll over again. So that is giving us what we'd want to see, hands down. Now, I've shown this before as well, and what in front of us is just the NASDAQ NDX, and then this is percentages above the 50-day moving average, and we can see from this level, that's August 29th date, you've just been going sideways. So you're really rotating through there. Now, I really don't want the rotation, I actually want the breadth to widen out, but before that, it has to go sideways. So I do like the way that this is setting up, and if you ever looked at these peaks, well, when this peaks, that's usually pretty much it. And you can see that where this broke that 50. If it breaks the 50, you're usually in for some pain. And you can see that you broke the 50 in here, you retested, broke it down in here as well, broke it in here. And you start going sideways and you can rebuild it. But that is really important for us to get and to understand. Make sure you subscribe because I do put out notes through the community tab. And if you are not subscribed, from what I gather, you do not see the community tab, and there are notes there that go out intraday now. So if that's of interest to you and you want to stay in touch with what's going on in the market, you might want to subscribe. And there's nothing I can do about that. If you're not, the community tab doesn't seem to pick up. So you have to just click that and all notifications. So you have that FOMC date. We never really got down there from that Thursday, Friday, and we can kind of see how we bounced in there, right? And then what we do is we mark the peak VWAP off the NQ, and then we have that huge level in here that we were watching. And we really couldn't get through that level today. And I'll just pull this straight across so that you can see it. You really couldn't stay above that, right? You got above it for a little bit. Everyone was like, yay. And then we broke it. Everyone boo. And then, we kind of drifted down a little bit. But what is this really telling us? Well, from my perspective, these little undercuts are telling you that you're probably going to find some support in here. And I don't know that you're going to break that peak VWAP, but I would watch this more than anything. Now, by tomorrow, those two are going to be darn close to one another, and that's going to be a really significant area for us to watch. I think really what you have to do is take a look at what's going on there with the blackout period that we're about to go through, government spending and the government shutdown and what's about to happen there. One side note, if you're trying to get in the community, make sure that you are looking for a invite this week. And if you're trying to get in and you're not on the wait list yet, I suggest that you do get on the wait list. All right, let's get to it. Now, one of the things I really don't think is factored in, we have the opportunity to actually have a shutdown by October 1st. You have end of quarter tomorrow, which is somewhat interesting as well, because you have a lot of rebalancing and selling that usually goes into end of quarter, especially in the third quarter going into the fourth quarter. You have that rotation. So we're facing that. On top of that, you have a 64% chance, they're saying, of a government shutdown. Now, this is not exact by any stretch. This is polymarket, and this just tells you where everybody is on these kinds of bets. But what I do think is interesting about it is the trajectory on how this is lifted, and you kind of got to that almost 80% level, came to 72, and then there was this announcement that made it drop. But, we're far from it here. And my opinion of this is I don't really think that people are factoring this in. I noticed today when the market dropped and I'll mark it off, that when this news hit that there was going to be a possible shutdown, they weren't even going to have this meeting, that the market dropped. I mean, it dropped, got cut in half on its gains. So that usually means to me things are not factored in. But repeatedly, it fully expects the government to enter a shutdown. This week, this is from the Associated Press. Republicans are daring Democrats, whatever. Democrats have held firm. Okay. Leverage demand, Congress take up legislation to extend healthcare benefits. I just don't know why they can't pass a bill. It's just absolutely mind-boggling. Trump canceled the meeting, was playing the congressional leaders, calling Democrat demands unserious, blah, 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 feeling pressure to negotiate because Republicans control the White House and Congress. I mean, if you control everything, you should be able to get it through, right? But holding their negotiating leverage, Senate Democrats will likely have to vote against a bill to temporarily, extend government funding on Tuesday, just hours before a shutdown. An uncomfortable position for a party that has long denounced shutdown as pointless and destructive. So this is where it gets super interesting. It's worth bringing up. So if things were going to stay the status quo, you don't have a shutdown. It's the demands, and I just think it's important. I don't care what side of the aisle you're on. It's important to understand what it is. There is a demand from the other party for an extension of healthcare benefits. And if they're not met, are they really going to go out there and sign a vote against a bill to temporarily extend government funding on Tuesday? I don't have a clue. A polymarket really probably doesn't have a clue. Maybe they do, maybe they don't. Maybe they want to be tough right now. Maybe they want to just have a functioning government. But what does this mean to us? Well, if they shut down the government, you get uncertainty. That uncertainty comes into the market. Things don't function the same way, for one. Number two, all the Bureau of Labor Statistics data, you don't get anymore. All that data, no, that data is just gone. Now you're going to get this other smaller subset of data like ISM, or you're going to get the ADP data or JOLTS data that is not defined by BLS. So you're going to get what we refer to as third-party data, and you're not going to get BLS data, and that's going to carry way more weight. And that is something that could offset the balance this week. Now, there is another thing that I don't think people are understanding, and I do think you're going to have net sellers out of pension funds tomorrow. It has been leaning that way all quarter, towards the end of this quarter from what we're saying. But this is just a real quick note out of GS, and what they're saying is, hey, the window's closed. Now, one of the biggest buyers of stocks out there, point blank, is corporations buying their own stocks back. And you're at a 93% blackout window now with 95% by the end of the week. So all of a sudden, all those buybacks that are in the market, whether it's Meta, Apple, Microsoft, Google, they're done. And they're done till 10/24. So this is usually when people talk about that seasonality going into this is usually when it starts right here. As we move into the Q4, we expect October and November to be more attractive months, corresponding with opening window seasonality, because they eat up the supply that's out there. And that's really important. So, and it is skewed. It's skewed towards tech. It's skewed towards financials. And when they get into those blackout windows, if Apple's out there saying we're going to buy 100 billion shares and they get blacked out because you're going into the earnings cycle, they don't pick up again until the 24th, which is 3.5, 4 weeks from now. And that is an issue because it does eat up some of the supply that's in the marketplace. So keep that in mind. Other than that, you'll see a lot October 1st, which is going to be on Wednesday, on where we stand. Do we have an opening government? Is the government functioning? It's ridiculous we have to have these conversations, but we do. Is the government going to be open? Is this going to be an issue? Is it going to get blown off? How are they going to position? How are hedge funds and pension funds going to position themselves at the beginning of fourth quarter? We have seen some really wild swings at the end of second quarter, and we could see some really wild swings here again. Let me show you what I mean by volatility, because I think this is really important. So here you have the end of second quarter, and if you took the peak of that Friday before the holiday, or that weekend, the holiday weekend's over here, you were down 90 basis points. By the end of the day in the last hour, you came roaring back and you're up 70 basis points. That Monday, you gapped up, and then you took that level off, and played around all week, obviously, and now you have that new quarter that's done, and then you come into June 30th, and after the market closes up and everyone thinks you're fine, from that gap up to that gap down, you lost another 50 basis points. And it doesn't look like it's a lot, but there's a tremendous amount of volatility that took place in here. And you can actually see even later how it expressed itself. And I think that's really important. It's not just that day. It's like the couple days after the end of a quarter gets really kind of wild. Now, this was also during July 4th, but when you start going through it again, like, okay, well, here's that Monday. Well, here's that Tuesday. Look at these days and how you were just grinding higher into the highs and then just gapping straight down, or you're closing down and you're just gapping straight up. So you have a lot of positioning that tends to happen when you do these quarterly rebalances. And I expect something like this. Throw that into the fact that you're not going to have demand from these corporations, from tech and financial corporations, and that you have a looming government shutdown. You can increase your volatility, which is what's so fascinating to me when we look at the VIX. And we see the VIX, like today, okay, you started kind of ticking up, but it's far from any kind of real concern about anything here. So I don't know really what's going to happen here, but I do think that it's, priced considerably cheaper than it should be, quite frankly. Now, in front of you is Move, and that is the bond market. This is bond market insurance. They're not concerned about a thing. And I think I just want to point that out, because when I'm sitting here saying you have the blackout period, you have the government shutdown, people will say, oh, he's talking about the next crash. Far from it. I'm talking about a rebalancing and where they're going to position themselves. Overall, if we look at the market in and of itself, I think you're fine. I don't think that there's a long-term thing here to really worry about, but that doesn't mean that you can't come down and retest some of these levels. So when we understand where we are and what's going on, that's when it gets really easy. For example, if we take a look at the 4-hour, and we went through this publicly today, one of the big concerns was, is RSI going to roll over here? And if so, how are we going to act there? Well, RSI is rolling over here, and it started to roll over around 4 o'clock. And we can see that, right? Drop this to the hourly. Remember, you're in the futures market. And you can see that, hey, we started to roll over right into here, 9 o'clock, 10 o'clock. We have this major wick because why not at the end of the day? And then you can kind of see how we're acting into that. But that's just really them closing their positions more than anything and saying, you know what, let me just get out of the way and then I'll come in tomorrow and see what happens. And it's right around that last hour of the day. They just wick out and go, you know, I don't want to deal with this overnight. I'll come in tomorrow. Because you don't know if you're going to get a government shutdown or they're going to have some last minute thing now so they don't look ridiculous to have it, 2 minutes before the shutdown. I mean, anybody else, if they were at a company, they would have been fired by now, right? So if you look at these levels and how they're acting, that is a divergence, and that might give us some stability in here. And we can always go back and just revert to this level and look at this Friday at 10 o'clock where all the data comes out, yay. And then you can kind of see how we held that level. So I think watching that 66.97 level is not the worst idea, but you have that JP Morgan collar unwind tomorrow, which I should have brought up earlier. But I'm just kind of winging this one because I've got so much to go over with you guys. I'm trying to pack it all in. But candidly, between that unwind and coming in the next day and seeing how that goes, there's a lot here that can really move this market. An interesting piece of data this week is with the EV sales being where they're at, a lot of people are expecting, we can get rid of the RSI here, a lot of people are expecting delivery numbers. I think they're saying Wednesday or Thursday is what we're looking for delivery numbers this week. And we'll see. But if we take a look at the 930 level and how the stock acted today, and I'll clean all this off and we can get back to it in 1 second. If we just put the VWAP on the 930 bar, from a 15-minute standpoint, that was it. You never could get over. Now, does that mean you're not going to? No, I think a lot of it has to do, honestly, with the government and the shutdown because the gap fill held all day long. So I don't have those people using 440 as support, which was the previous close right in here, right at 8 o'clock on Friday. I don't really have them coming out right around that 4 o'clock level too. And we just drop it right here. I'll drop it like it's hot and you'll see it. So if I just move that up to that level, right there, you'll see that every time we got down to that level, we held. So if you start breaking the previous close from Friday, maybe you have an issue, but you couldn't get above that VWAP. That may or may not be an issue. We'll have to see how that plays out. Watch the key levels right here. We're over, and then we just matumboed. But we had a real nice trade in it early this morning. Pulled out money of around $7-8, but I still really want to hold it for the swing trade. I do think there might be something with the EV sales and the fact that people know that this was their last time to get that EV credit. And if you wanted it, here it is. I do think that could front load this quarter and delivery numbers and give them a good quarter going forward, but you just never know. You truly don't know where, what you're going to get here. So that'll be Wednesday and Thursday, and we'll go from there and see how that'll play out. But I do like how you stayed within the 445 level and 440. Anything over 445 is very attractive. If you look at this from a chart perspective, you would really want this to push. Now, whether or not you get that to push or don't get that to push, that's really going to be the rub. I think you can get back up here depending upon how these deliveries go and getting through some of these other hurdles. But you're seeing a lot of new alliances too today. And I think that's another thing that we should really touch base on. And I'll show you what I mean by that. Like Shop's alliance today and how you're going to be able to go on OpenAI and buy things off of Shopify or Etsy. When that news hit, and I believe Etsy's also going to a different exchange, and that's why it's breaking out because people are going to actually be able to buy it on that exchange. Some people can't buy on other exchanges. And so, you see these kinds of moves and how they're acting. But I think that OpenAI news is absolutely fascinating. So we'll see how that's going to go. But you are getting developments like that are coming in. I also think biotech's going to continue to move the way that it is. You're seeing biotech names continually grind higher, breaking out, and they're pushing a lot higher. This QURE, I actually own this, but just disclosure. But I'll tell you what you're seeing out there. You're not seeing anything that's even regarding any kind of pullback in this stuff. MLYS, this name as well, you hit a new high today. Whether they stay up or they don't stay up or they backfill, you don't know. Another thing that's really good longer term, remember when we talk about the market, we talk about tactical, we talk about strategic, we talk about cyclical. Depends on what part of the cycle that you're in, right? EA. The fact that EA was bought, and we actually nailed this, but got very fortunate because if you look at this, you didn't have much time. We literally had this bar and we got in. before they halted it, and then the news, and then the sideways action. But they were pretty vocal about it. Silver Lake's pretty good about that kind of stuff. If they say they're going to do something, they pretty much always do it. So if you ever see their name in private equity, you kind of pay attention to it. But it's going to take 210, but it's going to take till probably June, July to close. 9 months to get 3.45%. Not everybody's going to want that, so they can go buy a 10-year treasury, right? I think that's one of the things. But here's my point. You don't buy this if you think that the market's going to get cracked. You'd wait for the market to get cracked and pick up the pieces. So clearly Silver Lake and private equity don't feel that way. Because if they did longer term, they're not putting this kind of money out. You're not dropping $55 billion if you think you're going to get it cheaper because tech's going to come in. So they clearly felt like, hey, we need to get involved in this. And there could be a whole litany of reasons why they felt that way. But one of them is not the fact that they think we're going into a recession and the market's getting smoked. It doesn't mean they're right, but they just would not have put capital to work that way. If we take a look at IWM, you got right to the highs again, and you're rejecting, and I think that that's important to note too. And it was kind of interesting that Qs were the leader here today, but now you're struggling with that 600 level. And as we talked about earlier, you're going to really have to watch that. I think the most important thing for us tomorrow is to just watch what some of the leaders have been doing. So I'll give you an example what I mean by this. I'll clean this all off. So IREN's a name that we've been playing, and candidly, we had guys that got involved in this little area, but I really got involved here after seeing this earnings report, which was just insane, the growth. What people don't understand about the growth, and just to explain it, they're taking because the revenues aren't moving as well, they're converting the revenue stream over to something with a higher gross margins. And when they're doing that into data centers from the mining, the gross margins are insane for the same square footage. So that's why the revenues aren't moving, but the gross margins are. So just FYI. So in this area, the way it held, this pattern we keep talking about, once it broke out and I understood it, I'm like, yeah, I'm just going to stay with this. I'm very happy with it. I consider this a leader. When they came out Friday and he was on TV speaking, I was shocked that the stock wasn't up on CNBC. 4-minute clip. You might want to go watch that 4-minute clip. It's definitely worth your time to understand what's going on with this company. CNBC, IREN, Friday. I think it was 4:30 or 5:30, something like that, Eastern Standard Time. Anyway, here's the point of this. That held today. That didn't need to hold. And some of these other names are holding as well, RGTI. So you have Andrew Left, who carries a lot of weight from Citron, but ragging on this thing on national television. Your put wall's 29 right here in red, and you're holding it. You're holding your put wall, even with him like ragging on it. I thought that was absolutely fascinating because you would think that you'd crack that, maybe test 27.5, maybe bounce back through it. Some of these other levels that broke their call walls and like they're trying to get through, yeah, it's an issue, but they're not falling out of bed. Here's a great example, just an absolute great example where Oracle cracked today, and this could have been a bloodbath. You know, there's nothing here, guys. Like there's nothing up here besides my 700 levels that I drew from trading it today. But if I cleaned these off, or what we'll do is we'll just move these up for a minute so that you can see it, because I don't really want to clean this all off. You see the breakdown here on Friday at 9:30, and we'll drop that down to that level now. And then you have the doji, and then this is what I get later in the day. And the doji did not finish 50% down on that bar. So I don't have net sellers there. I'd have net buyers on this bar, right? Because if the wick's greater than 50% of the bar to the downside, then you have net buyers on that bar, even though it doesn't look like it. Really important to get that concept because it will clue you in. Then if we overlay the RSI here, the RSI is not great here, but you stopped anyway. These kinds of details, you always want to kind of pay attention to this stuff. Like, well, why didn't we crack? You had every reason to crack and every reason to test this level or come down to that 270, and you just didn't. And I think that's very important when you look at this stuff. And, you know, someone else was talking about this earlier with IGV and saying, hey, what's really going on here? And yeah, when you look at IGV, does this look like it's over? No, it doesn't. So are we rotating again back into the larger names? And then are you supposed to start looking at the CRMs of the world again, or the work days of the world? Because I've been looking at this and I don't want to touch it because it scares me. But look at, because like these earnings, like it was really bad the way they came out and talked about the earnings. And same thing as it was here, and the same reason it was here and here as well. Like it wasn't great. It wasn't this great report, but look at how it's acting ever since then. And after everyone started saying, hey, these things are going to become agentic AIs, because that's the new cool phrase. And then you start overlaying this stuff and you're like, well, since earnings and that suck salad report, 12, 22, 55 have flipped. And then if we do something as simplistic as overlay the 200, oh, we're back over and we made a higher high today. Those three names are in the IGV. And I think that's super important. So is that going to be the new driver? Because we seem to be rotating. Look at AVGO and how it finally broke that 22-day again. So is that what's going to happen now? Are we going to rotate back into those? And that's what a secular bull market does. It rotates, right? It finds the next group and it rotates into that group. So I think that's definitely something for us to watch. Like, do we start seeing snow break out in these names again? It's very possible. But I think what we have to do before anything is I really think we have to get through the government shutdown, the end of the quarter, the JP Morgan collar, and go from there. From a technical standpoint, I think that's really where we're at. As far as news that could move the market, Tesla's a very huge piece of market cap and very tied into the S&P right now. So if deliveries are good, that could also be another kicker out there. That is it.